Hello, everyone, and thank you for joining the Tracking the Sun 2019 edition webinar. My name is Naeem Dargouf, and I'm just going to be introducing the main speaker today, Galen Barbos. Just a few logistics items. The call today is being recorded. Everyone is on listen-only mode. But we will have a question and answer session at the end of the webinar. If you have questions, you feel free to type them as we go. It should be on the bottom left of your screen, and I'll be collecting them. Also, one thing to note is that this year we do have a user survey that we welcome you to fill out. The survey itself is linked at the trackingthesun.lbl.gov page, and you'll be able to find it there. Note that on that page we have the link to the report, to the full set of slides that we'll be presenting today, as well as two data files. One is the data behind each of the figures, and one is the full data set of publicly the PV systems data that we're allowed to share. And so the full, I think there's almost 1.5 million PV systems, so you can download it there as well. With that, I'd like to turn it over to my colleague Galen Barbos, who will be starting the webinar.
Great, thanks Naeem, and thanks everyone for joining us. So a couple quick things before we begin. So in addition to Naeem and myself, there were a whole host of other folks who were involved in pulling together the report this year. From Berkeley Lab, Salma Elmala, Sydney Forrester, Christina Lacomar, Dev Milstein, and Joe Rand. From Exeter Associates, we had Will Cotton and Stacy Sherwood. And then last but not least, Eric O'Shaughnessy with Clean Kilowatts. So I just wanted to acknowledge all those folks. It was definitely a team effort. And then second, I just wanted to mention as well that the slides I'll be presenting today are sort of a somewhat pared down version of the full slide deck summary that we have posted on our report. There were maybe, I don't know, 8 to 10 slides that we had to just call out for the sake of getting through everything in the available time. So with that, let's begin. So for those of you who are familiar with Tracking the Sun, you'll know that the purpose of the report is to focus on historical trends in the installed price of distributed solar. For the purpose of this report, distributed PV consists of residential systems as well as non-residential systems that are either roof-mounted or are ground-mounted up to 5 megawatts in size. Anything ground-mounted that's larger than 5 megawatts we consider to be utility scale, and that's covered in a separate Berkeley Lab report called Utility Scale Solar that some colleagues of ours, Mark Bollinger and Yo Seal, are responsible for putting out. And that report should be coming out relatively soon as well. But so again, the purpose of Tracking the Sun is really just to focus on the distributed market. And it's an historical report. This year's edition focuses primarily on projects installed through the end of last year, though we do have a little bit of preliminary data for the first half of 2019. And in addition to describing trends in installed prices, we also include some trends related to other project characteristics, system size and component selection, some other attributes that we collect along with installed prices and that in some cases have some relevance to understanding installed pricing trends and may also be relevant to understanding the performance of distributed PV systems. So I'll be going through that material as well. A few new features in this year's report. So again, sort of with respect to the project characteristics other than installed prices, that aspect of the report has become somewhat more prominent over time. This year's report includes some additional information related to panel orientation, inverter loading ratios, and pairing of storage with solar. In addition, sort of a methodological issue here, when we describe installed pricing trends in this year's report, we really focus exclusively on host-owned systems. The prices that are reported for third-party owned systems can be somewhat problematic in certain cases and just in general are a little bit difficult to interpret. In years past, we would include some of the TPO systems in our installed pricing analysis, but this year we decided just to keep things as clean and simple as possible. We would just exclude those systems from the analysis of installed pricing trends, though we do include them when talking about other system characteristics. And then last but not least, in this year's report, we included for the first time a multivariate regression analysis that attempts to kind of tease out the impacts of different pricing drivers. So we continue to have sort of a lot of descriptive analysis that cuts the pricing data in various ways in order to sort of visually see how prices vary based on different project characteristics. But in addition to that, we now have this kind of more in-depth statistical analysis that can better isolate some of the impacts of those drivers. And then on the right-hand side of the slide here, I just wanted to note some of the other related ongoing national lab research activities. So I already mentioned the utility scale solar report that the Berkeley lab puts out. In addition, our colleagues over at NREL have their own PV cost benchmarking report that they issue each year, and that's rather than kind of a sort of data-focused empirical analysis like tracking the sun, is instead more of a bottom-up engineering model. And then lastly, there are really a whole host of derivative analyses that are based on the Tracking the Sun data set. Some of those happen outside of the labs. Within Berkeley Lab, though, we've used these data for a whole variety of other projects, including some current work looking at solar adopter income and demographic trends, and also some work over the years looking at how PV systems impact property values. So there's kind of this kind of family of derivative projects that build on this Tracking the Sun data. So before getting into the results, I want to just talk real quickly about the data itself. So the data that we present in this report is collected from state agencies and utilities. In total, 67 different entities across 30 states contributed data to this year's report. In the report itself, we have a table sort of identifying each of those entities and how many data points come from each of them if you're curious. Throughout the report, we distinguish between 3 different customer segments: residential, small non-residential, and large non-residential, with 100 kilowatts being the dividing line between small and large non-residential. In years past, we actually used a somewhat higher threshold, but we decided this year to bring that down to 100 kilowatts. All of the numerical trends are presented in terms of real 2018 dollars and DC watts. And then finally, just to be clear, when we talk about installed prices, we're referring specifically to the dollar per watt price paid by the system owner before any tax credits or grants or other kind of upfront incentives. So obviously, the prices net of those incentives would be lower. We have 2 different sample frames that we use for different parts of our analysis. We have what we call the full sample, which is really just kind of literally, the full sample, all of the records that we collect from the underlying data sources, cleaned and standardized in various ways. And then when we analyze installed prices, we focus on a sort of a subset of that full sample. So as I mentioned before, we exclude all of the third-party owned systems. We also, of course, drop any systems that are just missing installed price data. And then importantly, we also exclude any systems with battery storage or self-installed systems. Again, this is just for the installed price analysis. So just to compare our data sample to the overall population of PV systems in the U.S., our full sample consists of 1.6 million systems installed through the end of last year. That represents a little over 80% of the entire market. And you can see how that sample has tracked the overall market, looking at the figure here on the right and comparing the dark orange bars to the blue bars. Most of the gap between our full sample and the overall market really consists of kind of smaller and more mid-sized markets. Our coverage within the largest state markets is generally pretty solid, but in some of the smaller markets, that's where our sample is maybe a little bit less robust. The installed price sample, the kind of peach-colored bars on the chart, consist of a total of about 680,000 systems installed through the end of last year. So certainly quite a bit smaller than the full data sample, but a large data set nonetheless. And again, most of the difference between those two samples, the full sample and the installed price sample, has to do with the exclusion of TPO systems, and then also dropping systems that are just missing price data altogether. So with that out of the way, let's look at some of the PV system characteristic trends. So this is kind of everything other than the installed price analysis, which then we'll turn to after this section here. So here we see what's happened to system sizes and module efficiencies over time. If you look at the figures on the top, you can see that system sizes, both for residential and non-residential systems, have grown pretty substantially over time. So for example, residential systems on the upper left have almost tripled in size between 2000 and 2018. And that reflects partly just the fact that systems are getting cheaper, and so it's more affordable for customers to install larger systems. Part of it, though, also has to do with the fact that modules are becoming more efficient. And in many residential applications where you're dealing with a fixed roof space, having more efficient modules allows you to put more watts within a given square footage of available roof area. So that's also kind of one of the underlying drivers, particularly in the residential sector, behind the increasing system sizes. On the non-residential side, system sizes have grown. I think most dramatically you can see at the upper end of this percentile range. So the shaded areas on these charts represent the 20th to 80th percentile values. And you can see that the 80th percentile level among non-residential systems has really grown over time, and that's just illustrative of the fact that there's just a much greater preponderance of large non-residential systems, and this is in part just a function of the maturation of the market and a broader base of commercial customers becoming comfortable with this technology. And so not surprisingly, developers are increasingly trying to target larger systems in order to take advantage of some of the scale economies. On the bottom of the chart here, of the slide here, we show the trend in module efficiencies over time. As I mentioned, those efficiencies have increased. You can see that in the blue line, which shows the median module efficiency level in each year within our data set. And those efficiency levels have grown especially quickly over the past 2 or 3 years. And part of that really comes down to a pretty dramatic shift in the market towards monocrystalline modules. And you can see that in the stacked bars underlying that line where 2 years ago in 2016, only about 40% of the systems used monocrystalline modules compared to about 90% of the systems in our sample last year. So a really dramatic shift in kind of the uptake of module technologies over the past couple of years. And in addition to that shift towards monocrystalline modules has been greater use of kind of more advanced module architectures, in particular greater adoption of passivated emitter rear cell or PERC technology. Here we see what's happened to inverters over time. And you can look on the top where you see just the growth in module level power electronics, so either microinverters or DC optimizers, and how the market share of those technologies has grown over time. Within the residential sector, you can see that really it basically becomes sort of the standard system design to include either one or the other, with about 85% of all residential systems last year employing one or the other type of module level power electronics. Also among small non-residential systems, these technologies are quite common. Within the large non-residential segment, though, you can see that still neither technology really has any dominant market share. The other thing to note among the figures at the top is that it's really been DC optimizers that have been fueling the growth of module level power electronics over the past 5 or 6 years. The market share of microinverters has remained more or less flat within the residential sector at about 35–40%, with really all the growth, as I mentioned, kind of coming from DC optimizers. The figure on the bottom shows trends in inverter loading ratios over time. So this is definitely kind of getting into the weeds. For those of you who aren't familiar with this term, the inverter loading ratio refers to the ratio of the module rating in DC watts to the inverter rating in AC watts. It's sometimes also called the DC to AC ratio. And this parameter can be important in terms of understanding some of the performance characteristics of systems in terms of the load shape and whether there's clipping during kind of peak solar hours, as well as sort of the efficiency level that the inverter operates at. So I'm not going to say a whole lot about these figures other than maybe just to note a few of the kind of key trends that emerge when looking at the graphics here. So first is that inverter loading ratios have generally grown over time. They vary quite widely across projects, as you can see, but in general are higher for systems with microinverters than for systems with string inverters. And then last, that they are higher for non-residential systems than for residential systems, and are highest overall among the large non-residential segment. Looking here at trends related to system mounting configurations and orientation, the charts on the top show the percentage of systems in the sample that are ground mounted and that have tracking. And you can see, not surprisingly, within the residential segment, neither of these are particularly common, but you do see some significant share of systems that are ground mounted within the non-residential segment. And most dramatically, you see among large non-residential systems how the share of ground-mounted systems has really grown over time. And that corresponds pretty closely to the trend that we saw a couple slides ago in just the growth of non-residential system sizes, and how the upper end of the size spectrum has really increased over the past decade or so, kind of in concert with this growth of ground mounting. The use of tracking equipment is still relatively uncommon, even among the large non-residential systems in our data set. And that is maybe notable just in contrast to the utility scale market, where tracking is much, much more prevalent. And so even though among the large non-residential systems, many of them are ground-mounted, still we don't see the same level of adoption of tracking as among even larger utility scale systems. The figure on the bottom shows how system panel orientation has evolved over time. That's what the figure on the bottom left shows. And you can see that although the majority of systems in the sample are south-facing, that fraction has declined over time. Just a little bit over 57% of systems last year were facing south. And there are a couple different possible reasons behind that trend. So one is just that systems have gotten less expensive, and so it is no longer as important to have optimally oriented systems in order for them to pencil out economically. One other hypothesis is that as states have moved towards time of use pricing, one might expect to see a greater sort of a shift in how systems are oriented so that the panels are kind of better aligned to peak production during those peak periods. In fact, we don't actually see much evidence of that hypothesis being true. As you can see in the figure on the bottom left, there's been growth both in west-facing panels, which is what you would expect with time of use, as well as east-facing panels. So it's really more just sort of an increasing dispersion of panel orientation than some general trend towards greater levels of west-facing panels. The other thing I'd note is that we did kind of look at how this trend varied between states with and without time of use rates for residential PV customers, and didn't, at least superficially, notice any obvious differences. So this is something kind of notable and maybe worth exploring and kind of observing how this might change going forward as more states reform their retail rates in this way. And then just lastly, the figure on the bottom right shows in more detail the distribution of panel orientations for systems installed last year. If you squint really hard, you can see that south-facing panels are most common within the large non-residential segment, somewhat less so among small non-residential customers, and then the least prevalent among residential systems. And this really just, I think, reflects the fact that with non-residential systems, you're often looking at flat rooftops and therefore greater ability to orient the panels to the south. With residential buildings, you're kind of at the mercy of how the rooftop is oriented. And so what you're seeing here is really just some indication of how prevalent south-facing roofs are. The last little bit of descriptive analysis I'll present in this section here looks at the adoption of storage in conjunction with solar. So what we're showing here is the percentage of PV systems that included storage. And we don't actually have very comprehensive data here. We only have this data for the 6 states shown in the top slide. But at least among those states, you can see that last year, between roughly 1 to 5% of residential systems and non-residential systems in those states had storage installed in conjunction with PV. We really only have time series data here for 2 states, Arizona and California, but you can see in both of those cases that there was a pretty dramatic uptick in 2018 relative to the prior years. One of the states missing from the top slide, but that is very important in terms of understanding the development of solar plus storage, is Hawaii. And as a little bonus, I added the chart on the bottom here. So this is actually not from tracking the sun, but this is some data that we've collected through other means and shows basically the same thing as in the top figure, but just focusing on residential PV permits on the island of Oahu. And you can see really just how dramatic the uptake of storage has been within the residential PV market there, with almost 65% of residential systems in Hawaii permitted last year, including storage. So definitely an outlier relative to the other states, but interesting and illustrative of just how dramatically residential PV markets can respond, in this case, in response to some relatively significant changes in net metering rules and the ways that residential PV is compensated in Hawaii. So with that, I'm going to now turn to kind of the heart and soul, so to speak, of tracking the sun, which is the discussion of trends related to installed prices. And again, this is based on that smaller subsample of the data set that I described earlier. So first, a few just general caveats or disclaimers. I'm not going to go through all of this. I think many of these points are somewhat self-evident, but I will just perhaps highlight the last of the bulleted items here by just noting that these data are self-reported. They're messy. We generally have some faith in the law of large numbers and believe or hope that across the 680,000 data points that the signal will make its way through the noise. But it is something to be aware of, and especially as you start cutting the data into smaller and smaller kind of subsegments, some of this noise can become more significant. And so it's just something to be aware of and vigilant about, especially for those of you who might download the public data set and play around with it yourself. So with that, here we show the long-term temporal trend in national median installed prices. That's the figure on the top. And you can see just how substantially over the long term installed prices have fallen. On average, over this full historical period, prices have fallen by about 50 cents per watt per year. That pace of decline has tapered off a little bit over the past, say, 4 or so years. Last year, prices fell by basically 10 to 20 cents a watt, depending on the customer segment. And that decline is consistent with what we've seen, again, over the past, say, 3 or 4 years. If you look at the trend lines here, you can see that in the period from roughly 2008 to 2014, prices were dropping very quickly by about $1 per watt each year on average over that period. And much of that was driven by some pretty dramatic declines in global module prices. Since then, module prices have continued to fall, but at a much slower rate. And so consistent with that, overall system level installed prices have also fallen at a slower rate. In addition to that, there are a couple other factors that have helped to, I think, kind of dampen the rate of decline in recent years. One has been just that customer acquisition costs continue to be rather high, particularly for some of the larger installers. In addition, in the past couple of years, we've seen pretty expansive growth in solar loans as kind of a fairly dominant form of financing. And the significance of that is that many of those loans include origination fees or other sorts of financing fees that often get rolled into the install price that ultimately gets reported. And so these are kind of new costs, so to speak, that didn't really exist or that didn't exist in large numbers prior to the growth of solar loan financing. But these additional fees can be significant. We don't really have great data on it, but at least anecdotally, I've kind of heard anywhere from, say, 5% to 20% of the loan principal amount. So, I mean, you could be looking at, in some cases, at fees on the order of 50 cents a watt, which, relative to the overall installed prices shown here, you can see make up a pretty significant share and would certainly help to dampen the overall rate of decline. Figure on the bottom of this slide shows just the year-over-year price declines in the 5 largest state markets in our data set. And I won't say a lot about this. I think in general, when looking at state-level trends, one does have to be a little bit cautious just about attributing too much significance, particularly to the non-residential trends, since in some cases, even though these are the largest markets, they still may be based on kind of relatively small underlying samples. That being said, looking at the residential numbers here, one thing that's interesting and perhaps informative is that the year-over-year price decline in the 5 largest markets was in all cases lower than the overall decline in aggregate national median prices. And that's maybe interesting just in that it's consistent with kind of what we might anticipate as markets mature, the low-hanging fruit become increasingly picked over, and so it becomes progressively more and more difficult to drive costs down in those markets. And so at least if we believe the data, they seem to be telling a story that's kind of consistent with that hypothesis. So install price declines reflect a combination of drops both on the hardware side and on the soft cost side. I mentioned already how module prices have fallen over time, and in particular with some very dramatic declines during the sort of 2008 to 2013 period. You can see that in the top figure here, where we show module price index over time. In addition to that, inverter costs, although they're at least historically much smaller than module costs, those have fallen over time as well. And then the bottom figure here just shows the sort of the decline in everything else. It's essentially the residual term when you deduct the module and the inverter prices from total installed prices in each market. And in looking at the numbers here, I think the basic story is that over the long run, the total decline in system-level installed prices is about half due to drops in module and inverter prices, and is about half due to declines in everything else, particularly on the soft cost side. And that 50-50 split, it varies a little bit depending on which market segment you're looking at, and varies a little bit depending on which particular time period you're looking at, but just at sort of a high level, it's about a 50-50 split in terms of what has been driving the overall decline in system prices between hardware and soft costs. And here we present just a little bit of preliminary data on the install prices in the first half of 2019. And this data is based on a relatively small number of states, the 5 states shown here, which are all relatively large states, but still it's a subset of the overall national market. And what you can see here is some pretty subtle trends, at least within the residential and large non-residential segments. You can see some very modest continuation of price declines in the first half of the year. Small non-residential market, you actually see the opposite. Now it's, I think, a little bit hard to know how to extrapolate these trends over the full year and over the full kind of the full country. So we'll have to wait and see. I would note, though, that kind of hearkening back to a comment made a couple slides ago, that the price declines in the larger states seem to have slowed more rapidly than elsewhere. And so one might anticipate seeing slightly larger price declines than what we see here once we expand the analysis to kind of the full set of states in our study. So that will remain to be seen, and hopefully we'll know more in the months ahead as the data come in. And then last, in this section here, we just compare median prices from our data set to a number of other price and cost benchmarks that are out there. So the median prices from the Tracking the Sun data are represented by the colored bars here, and the error bands around those bars represent the 20th to 80th percentile range. And then the other pricing and cost benchmarks, they include a combination of modeled prices, so that includes the NREL numbers that I mentioned near the beginning of the presentation, as well as the price benchmarks that SIA and Wood Mackenzie put out as part of their Solar Market Insight report. In addition to those model prices, we show here price quote data from Energy Sage, and then for residential systems, we've got some data pulled from the financial reports of a number of the publicly traded large installation firms. And I think the basic story behind this comparison is that in general, these other pricing and cost benchmarks are below the medians in the LBL data set and are kind of more closely aligned with the 20th percentile values. And that reflects a number of different factors. Part of it is that, at least among the model prices, these may be more indicative of kind of turnkey or best-in-class systems with relatively standard designs, whereas the LBL data represent a much kind of broader array of different system designs and broader array of different installers and markets. A number of other potential factors we've identified in light blue at the bottom of the slide here, differences in the timing or vintage of the data. Obviously, with reported system prices, there's this kind of phenomenon sometimes referred to as value-based pricing, which is just installers charging whatever they can get away with charging, as competitive companies will do. And so those prices may be higher than sort of the theoretical competitive market price in regions where there's less than perfect competition. So a whole host of different possible reasons. I think that the most important point, though, is just to kind of understand and acknowledge some of the differences that exist, because there are lots of different numbers that get quoted and that are floating out there, and they all can be useful and meaningful in different ways, but it's just important to kind of be aware of some of these differences. So now I want to turn to talking about some of the variation in installed prices across projects. And to begin, it's maybe useful just to visualize that variation. And so the figures here show the distribution in system prices for PV systems installed in 2018. And you can see just how wide the distributions are. And although there's long tails, they still have a somewhat well behaved shape, just with these nice kind of normal-like looking peaks, but they're wide, and that pricing variability really has persisted over time, even though markets have continued to mature, and that persistent pricing variability, it just reflects some fundamental underlying sources of variability in projects. So part of it has to do with project characteristics, what kinds of components are used. Part of it has to do with attributes of the installation firms, how much experience they might have, and kind of how they approach pricing in the markets where they operate. And then part of it also just has to do with the many different differences in market policy and regulatory conditions across the country. Things like permitting and interconnection rules and processes, incentives, retail electricity rates, and net metering. All of these things can impact both the sort of underlying costs as well as the way that PV systems are priced. And so throughout the rest of the report, we spend some time kind of trying to dig into the drivers for this pricing variability, both through some simple descriptive analysis as well as through this new multivariate regression analysis. And then beyond this Tracking the Sun report, there's also a broader literature out there that has also kind of taken up this question. And many of the studies we've actually been involved in, and they rely to varying degrees on the Tracking the Sun data set. But it's a complicated question and issue, and there's been some good work out there by ourselves, but also a lot of others that have looked at why PV system prices vary so much. So I'll just go through kind of a few kind of high-level illustrations of how PV system prices vary and kind of get indirectly at some of the sources of that variability. The first one is just looking at how system prices vary based on project size. And so among residential systems, system sizes can vary pretty widely from as small as say 2 to 3 kilowatts for a relatively small residential system to 10, 11, 12 kilowatts or more for some of the largest residential systems. And as you can see in the figure on the upper left, prices vary in some pretty consistent and predictable ways as systems get larger. So across kind of the upper to the lower end of this residential system size spectrum, you can see that median prices vary by about $1 per watt, from $4.30 for the smallest systems to $3.30 for the largest systems. For non-residential PV on the upper right, similarly, prices vary quite a bit across system sizes. Even though we segment the non-residential systems into small and large, you can still see that within those two segments, there's both quite a range in terms of system sizes and correspondingly quite a range in terms of system prices. Obviously, as you push to even larger systems, utility scale systems larger than 5 megawatts, prices are even lower, though again, we don't cover the utility scale market in our report here. Systems prices also vary by state. And again, as I mentioned earlier, one has to be a little bit careful about ascribing too much significance to some of these state level differences, just because the data can be a little bit noisy and idiosyncratic, especially with some of the smaller states where the underlying sample may be driven by, say, a single large installer that might be reporting especially low or especially high prices. That being said, there are some kind of fundamental differences across states and fundamental reasons why install prices would vary as they do across states. One other thing that I think is important to note is that some of the largest markets actually are among the most expensive. And I'm looking in particular at the residential market on the upper left, where you can see California at $3.80 a watt, Massachusetts at $3.80, New York at $3.70, whereas some of the smaller state markets on the left-hand side are quite a bit lower priced. And this is a little bit counterintuitive, because you would ordinarily expect that in larger, more mature state markets, you'd have just kind of greater kind of market level scale economies, more experience, and lower prices. We don't see that here. In the regression analysis that we'll present in a little bit, we actually do see that there is kind of a more intuitive correlation between market size and system prices, with lower prices tending to occur in larger markets. But that relationship is obviously obscured in the figure here just by virtue of all of the other things that also impact prices and are obviously counteracting the effect of market size. But we'll kind of return to this issue again in a few slides when we look at the multivariate regression results. And then here we see how install prices vary across installers. So this figure here might take just a second to explain. What we've done is we've just looked at median prices for the top 100 residential installers last year. And so for each of these 100 installers, we calculate the median price and the percentile range, and that's what's shown on the graphic here, where we just order the installers from lowest to highest in terms of the median price, and that's what the black dots show. So you can see in looking at the trend here that on the extreme ends of the figure, there are some weird things going on with installers that are reporting very low or very high prices, and I would imagine that probably in all of those cases there's some kind of data reporting anomaly occurring. But for the vast majority of these companies, the median prices are somewhere in the $3 to $5 per watt range, with most installers reporting median prices below $4 a watt. And you can see, though, still that's a pretty wide range across companies, reflecting some of the things that I alluded to earlier: differences in firm size and experience level, differences in their level of training. Some companies may specialize in particular types of systems, or may have preferences or affiliations with certain vendors, and their system prices might vary as a result of that. You also can just see probably some kind of implicit correlations here between installers and the markets in which they operate, especially for kind of local companies where, of course, if you've got a small company that operates in a relatively high-cost market, you're going to expect that their systems will be relatively high-priced, and that's more a function of the market than it is of the company. And it's just one of the reasons why it's important to kind of bring some more advanced statistics to bear here, so that you can kind of separately tease out the effects of each of those drivers. Within the report itself, we then present some descriptive trends that show install pricing differences across a number of different dimensions, looking at how install prices vary based on module efficiency, inverter type, mounting type, whether systems are installed in new construction or retrofit, tax-exempt systems installed at tax-exempt non-residential sites versus for-profit commercial sites. And then we also, in the main report, do compare the reported prices for third-party versus host-owned systems. The third-party data, again, is otherwise excluded from the installed price analysis, but just for the sake of reference, we do have a text box in the main report that presents that information, just in case you're curious. But for the sake of brevity, we're going to skip over all of those that material here, but I did want to just note it in case you wish to consult the full report for any of these pieces. And then last, we're going to turn very quickly to the results of the regression analysis. So for those that don't have background in statistics, don't be scared of the equation here. This is just a linear regression where we're regressing system price against a variety of independent variables related to system characteristics, characteristics of the market, and characteristics of the installation firm. We also have a state fixed effects variable and a quarter fixed effects variable. I should mention that our Eric O'Shaughnessy, who's one of the contributing authors on the report, was really the kind of brain trust behind this part of the analysis. So all the credit certainly goes to him for developing this piece here. And just the last thing I'll mention is that the regression analysis, we're focusing just on residential systems and just on systems installed in 2018. And so the figure here shows the results of that analysis. In the report, we have kind of the standard regression results table with coefficients and standard error terms. What we've done in the figure here is just try to show how those regression coefficients translate into kind of dollar per watt pricing variability. And what we see here, if you look, say at the bar at the very top, which relates to system size, is if you go from the 20th percentile system size to the 80th percentile system size, that corresponds to a difference in price of about 80 cents a watt when controlling for everything else. And so this is just sort of a more kind of accurate way of isolating the effect of system size compared to what we looked at earlier when we were just sort of looking simply at how median prices vary based on system size. Among the other variables shown here, you can see that prices tend to be higher for systems with premium efficiency modules, for systems with microinverters and DC optimizers, and for ground-mounted residential systems. You can also see that prices tend to be quite a bit lower for systems installed in residential new construction compared to retrofits. Those are all sort of the system level variables that we included. Below those, we show the various market and installer level variables. And in general, the impact of those variables on prices is lower than what we observe and estimate for system level variables. But you can see that the first of those variables listed in that second group, market size, that refers back to this issue we were talking about when looking at the comparisons across states, where there we noted that the larger state markets tended to have higher prices. Here we show that when you control for all of the other variables, larger markets tend, in fact, to have lower prices, which is more in line with what we would expect. And then kind of near the bottom of the figure here, you can see the range across the state fixed effects variables. And that range just reflects the impact of sort of state level differences above and beyond those that are listed above. And the next slide, which is the last one, just kind of shows those state level fixed effects variables for each individual state. And the way to interpret these numbers is they represent the difference in average price for each state relative to California. California is kind of the control state, and that's after controlling for all of the other variables that are included in the model. And so you can see that the range is generally consistent with what we saw earlier when looking at the descriptive results. And for some individual states, the results are pretty consistent between the regression analysis and the descriptive results. But that there are some states where when we introduce kind of this more sophisticated statistical technique, you can kind of see how the state level factors might come into play in ways that aren't really readily observable or might be obscured when looking at the descriptive results. So that was, I think, a very kind of quick and somewhat cursory discussion of the econometric results, but I do want to leave a few minutes here for some Q&A. So with that, I'm going to just offer a couple quick conclusions and then hand it back to Naeem, who will read off some of your questions. So the conclusions here, this is an annual report. The basic conclusions don't really change much from year to year, but I mean, basically, prices have fallen over time. The rate of decline has tapered off in recent years. Price declines both over the long run and more recently are due to declines both on the hardware and soft cost side. And then lastly, we continue to see this pretty widespread variability in system prices that reflect kind of a whole host of different underlying pricing drivers. So I will now just leave us on the final closing slide here, where you can see the URL for the report and for our mailing list and our contact information. And I will turn it over back to Naeem to read off a few questions.
Great. Thank you so much, Galen. So we do have a number of questions here. We won't be able to get to all of them, but let's get started. There were a few questions on the sample and how we chose the states that are included in the data and whether we have plans to expand to other states.
Yeah, I mean, we sort of are happy to include as much data as possible. So the only constraints are relate to our time and the responsiveness of people who we reach out to for data. But certainly if anybody on the line is aware of data sources or states that aren't included in our analysis but that could be, please let us know. We're always happy to include more data and more states.
Great. We have a couple of more general questions. One is a general question about the difference between LCOE and the installed prices that we report.
Mm-hmm. Yeah, I mean, so LCOE is a more comprehensive, albeit still imperfect, measure of system prices or costs. And so, when calculating the levelized cost of electricity from solar or any electricity generation resource, one of the key elements of that is going to be the upfront cost. But then, in addition, you have to then account for the performance of the system over time, how many megawatt hours or kilowatt hours are generated. That's the denominator of the LCOE term. And then in addition, you've got various ongoing operating expenses that can impact the LCOE. Now with PV, those are maybe less important, though I suppose replacing the inverter or other components are important. But yeah, so I think to answer your question, upfront cost is one key input to an LCOE calculation, but there are other important inputs and elements beyond that.
Great. There's one question about the regression results to see if we have any insights as to why residential ground mounts are more expensive than rooftop.
I mean, I think the general sort of explanation would just be that there are additional costs associated with the trenching and foundation work that wouldn't be present in the case of a roof-mounted system. But that being said, it's such a small fraction of residential systems that are ground-mounted, and I mean, even though we did run this regression analysis where we attempt to control for other factors, I think my guess is that the vast majority of those residential ground-mounted systems are coming from just one or two states, and there may be some sort of other unobserved or unmodeled factors that could be at play and kind of interacting with that variable. So I guess I'm not sure that we should put a huge amount of faith in the specific value of those results, though I think intuitively there's reason to sort of believe and understand why the prices might be higher for ground-mounted systems.
Great. There are a couple of questions on whether we have breakdowns in terms of what constitutes the installed price. For example, do we know what the typical percentage of total cost comes from labor or permitting?
Yes, we don't. I mean, the data we collect and receive is really just the sort of total installed price. And any sort of breakdown, at least on our end, has to be sort of inferred. And this is where some of the other work out there that is based on bottom-up engineering models is really useful, because I mean those engineering models do allow you to sort of disaggregate the costs in a way that we can't based on just this kind of top-level market data.
Good. So maybe the last quick question, I think this is kind of a plug for the data file as well, is where could one access data specific to a particular state, and generally where does one download the data?
Yeah, so I mean, we, as Naeem mentioned, have posted a public data file, and it has 1 point some million systems in it from most of the states in our analysis, though there are a couple states who provide data to us entirely under non-disclosure agreement, and so we have to remove those from the public data file. But data for the other states are in there. So you can download the public data file and obviously filter it down to just the states that you're interested in. I would, though, note that some of the data, a lot of the data actually that we collect, is already publicly available in some other form. And so, for example, California, most of the data we get comes through the California Public Utility Commission, who posts something called the currently interconnected data set, which is this massive data file of all the interconnected PV systems in the investor-owned utility service territories. So that's a publicly available data resource. We collect that and integrate it and kind of standardize it so that it can be sort of assimilated with all of the other data that we're collecting. But there's a lot that's out there sort of already in public form. So depending on which state you're interested in, you may or may not even need to go through our data file.
Excellent. So it is 11 o'clock sharp here in California, and so we've arrived at the end of the webinar. Thank you so much, Galen, for the presentation. Thanks to all for joining the webinar today. And again, you can follow up with us by email on the email addresses listed here. And please do fill out the survey that I sent a link out to, and you can find at trackingthesun.lbl.gov. Thanks, and have a great rest of your day.